Hello traders, Gary Wagner here. Just about 10:45 in Honolulu, 4:45 in New York. It is Wednesday, 26th day of April, 2017, and this is the Daily Report for Gold and Silver. President Trump releases his long-awaited tax cut proposal, and as proponents and advocates digest the information and begin to look at what they want to do with this proposal, we are first seeing some effects within the market. As we look at the precious metals markets, gold was trading higher today, although nominally higher. When we look at gold futures, that's at $12.70.20, up about $3 on the day, with a low of $12.60 and a high of $12.72.80. So as you can see, we close much closer to the high than the low. We are seeing some good support, and we'll talk about that as we pull up our first chart. Spot gold, of course, $12.68.77, putting it up almost $5 on the day. Over to silver. Silver, however, is trading lower, off about 12 cents at $17.46. It's traded to a low of $17.29 and a high of $17.62. And then over to spot, $17.49.10, putting it down about 8 cents on the day. One of the interesting things is it has really, the recent activity in both gold and silver has really spiked up the gold-silver ratio, and I do want to take a quick look at that as we pull up our charts today. Absolutely an interesting day, with gold pricing closing up moderately higher on the day, currently trading up about $3.60, $3.70 higher at $12.70.80. Of course, this is most active futures. We are looking at a daily chart. Now, on this daily chart, in essence, I have two different moving averages. One of the moving averages is a shorter-term 50-day moving average, and the other moving average is a 200-day moving average. And the 200-day moving average is being drawn in red. You can see that line right up here. And what is interesting is that we can see where this 200-day moving average has acted as resistance, as here, and all throughout here you can see that this created headwinds coming in as the market broke up and then started trading lower. Realize it came just shy of 1,300 when it traded to 1,297 just a few days ago. And what is interesting about today's activity is take a look at this low right here, because you can see that we came close to that a 200-day moving average. That's sitting at 1257.70. The low today, 1260.70. So about $3 off the low. But the other thing that I find impressive is once we hit that low, you can see that not only did the market begin to surge up, but it closed much closer to the high of the day than the low, and really got back much of the ground that it had lost as it traded to these lower prices. And traders, as far as the moving averages are concerned, the fact that we keep two of them, a 50-day and a 200-day, these two different cycles, we also want to look at the potential for them to cross. Now, obviously, as you have back here in March of last year, when you have the shorter term moving average crossing above the longer term moving average, that is obviously a very bullish sign, and that tends to correspond to dynamic rallies in the market. In the same way, when you have the shorter term moving average crossing below that 200-day moving average, as it does right here, that's really signaling the potential for a pretty hard sell-off, as you can see evidenced by this market move down just following last year's election, in which we saw the market spike up to 1340, only to close lower and then sell down to these lows at about 1120 by the end of December, and bottom end of December, beginning of January, which is when this dynamic rally started. The reason that I bring this to your attention is as follows. We are now seeing a consolidation in the market and a compression in which the short-term moving average is moving closer to the longer-term moving average, and we want to see if it's going to cross, because if the market dynamically moves off of this price point, we would in fact see these come closer together. We would get that what's called a golden cross, in which you've got these two different moving average cycles crossing. In this case, it's called a golden cross. In the case of this area here, where the short-term cross is below, that's called a dead cross. We obviously want to see a golden cross at this point, and that would give us a very, very strong confirming technical study indicating that the rally had begun and could get much stronger. And traders, lastly, I do want to take a look at something that we haven't looked at in a while, but it's something that I absolutely want to focus upon because I think we're at a point in time in which this particular ratio will move up in terms of the number itself. This is the gold-silver ratio, which is currently sitting at 72.45. What this represents is it takes roughly 72.5 ounces of silver to purchase 1 ounce of gold. That is the equivalent or the ratio. We have seen this market in terms of the ratio. If we go back, this is 2015 right here. 13, this is a longer term, of course, weekly chart, and this is 2011. We've seen this market as low over the last, call it 5 years, 7 years. We've seen it as low as 32 ounces per 1 ounce of gold. That, of course, is when we had skyrocketing prices in both gold and silver, but we had silver really clipping up, approaching $50. The one thing that you can say is that we had seen this market move as high as about 82 to 1 right in here. From there, it did trade lower. And this, of course, is when silver got really, really strong, much stronger in relation to gold. It went down to about 67. And we can absolutely plot a support line at this point. My sense is that we will see this ratio move up. In other words, I believe that over time, a short period of time, we will see it take more ounces of silver to purchase a single ounce of gold. I would look for initially this ratio to go to about 75, and I think that it will not find any kind of major resistance till about 77.50. For those interested, there is a couple of ways to play this spread in which you're buying gold and selling silver. And in terms of the equivalent, please email me, let me know if there's interest. If so, I'll definitely include that on an upcoming show as to how to actually participate in this average. In other markets that we follow, we saw the U.S. equities, which had such a solid day yesterday, actually go and trade lower once the announcement was made. A Dow Jones Industrial Average closing off nominally, but closing off 21 points lower at 20,975. In terms of the net change, it's only about 0.1%. A Standard & Poor's about a half of that in terms of net change. I will call this unchanged on the day at 2387. And then lastly, when we look at the NASDAQ is at 6025 net change, and after that historical milestone going above 6,000, it is holding quite steady. Now, one of the markets that's quite interesting, of course, is the dollar index. Let's go ahead and pull that up. And when we look at the dollar index, you'll see that it was up fractionally, up about 0.2%. And so today we had a scenario where we had a stronger dollar and stronger precious metals. Quite interesting considering that over the last couple of days, we've had a weaker U.S. dollar and weaker gold prices. So kind of an interesting turnaround in that. Lastly, do want to look at crude oil. Crude oil is trading lower today at 49.28. Interesting action in the U.S. dollar, with the U.S. dollar finding some support today, closing up almost 0.2% at 98.82. What I find most interesting in terms of this particular move today is the fact that when we look at that on a daily chart, which is what we have here, and we include our longer term 200-day moving average, which is this dotted line right here, you can see that the U.S. dollar came within striking distance of this long-term moving average, closing just under it, as I said, at 98.83. So it's going to be interesting to see where the dollar goes and if it can effectively trade above this moving average, because that really tells us on a long-term basis whether or not we might see a return of strength in the U.S. dollar. Crude oil does continue to fall in terms of pricing. It is still effectively trading below $50 at $49.26. Today, it saw a decline of about 0.6%, a loss of 30 plus cents per barrel. What I find interesting is it is right in between at this point our longer term moving average, this being our 200-day in red, and our 50-day shorter term moving average, which is, of course, our blue line. We can see that for the last couple of days, although it's been trading under pressure, it at least tentatively has hit these lows. These lows right now are at around 48.90 in that area. 48.94, of course, that is the area of this particular moving average at 48.90. Market closes at 49.25, so just above that, but still below the 50-day moving average. My sense is a break below this particular long-term moving average trend line will take crude oil prices at a minimum to about 47, and as much as, in terms of the lows, as low as, I would call it 44 on the low side to 47 on the high side. And that, of course, would have to be predicated by a break below this 200-day moving average. So traders, as we spoke about during the technical study section of our show today, the fact that gold is traded to a low which is just above a 200-day moving average does warrant us taking a close look at potential support in the market and looking to see this market move up from there. Because if it does break below there, it's got the 50-day moving cycle just sitting very, very close. But below that, that would be our next point that we would look at. But the point that the lows that we hit today in gold came right within that 200-day moving average, and it moved rather quickly off of those lows to close higher, to me, is a positive statement for those in the bullish camp. And my sense is that this is a real strong area to look for support. Once we, or I should say, if we get confirmation that this is an area that gold pricing has found support, I will send out a special trade notification or trade alert recommending the initiation of a long position. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.